Hey guys, it's Standard Trader Man. I hope everybody's doing well on this Wednesday. It is raining here in Maryland, and it is just a dreary evening. And rain's going to continue to tomorrow, and I'm not really looking forward to the rainy weather, guys. So I saw a lot of good questions come across my feed today regarding a lot of different things. First of all, I saw a lot of questions about taxes. I don't get involved with that at all. Everyone's tax bracket, everyone's positions, how you file taxes, if you have an LLC and so forth. It's all, it's all relative. The only thing I will say is that if you are going to day trade, it is best for you to consider talking to your accountant or tax advisor to mark yourself as a day trader as a profession, because I think it helps you, or it could potentially help you when you take losses, because you still got to pay taxes on losses and stuff like that. So if you if you make yourself a day trader on your tax form, I think that might help you a little bit better. So just keep that in mind. That's the only, I wouldn't call that advice, but that's the only thing that sticks out that might be beneficial for you to ask for. Some questions coming through about offerings and RS. Okay, let's talk about that very briefly. Why are people scared of it, and so forth. So here's the deal. There's a couple different types of offerings. You have direct offering, you have shelf offering, you have public offering. Three of the main ones. Okay, direct offering is probably one of the safest or easiest to get beyond. Possibly less dilution and so forth. Like you saw today, XSPA. It was a direct offering, and it was at the market, which is $5.25 at the moment. The stock should have came up very quickly, back to or near 525. Surprisingly, it didn't. I think a lot of people took their profits at around 489. And I think it shot up to 498 at some point. But anyway, I think a lot of people started taking their profits. It dipped back down. Same people who took their profits probably bought back in the 470s and then riding the way back up, and they'll probably send it off again and then so forth. But it should be trading at 5 or close to 5 tomorrow, hopefully, and then move up from there. There's always, gotta keep in mind, they need the funding for what they're trying to do. They're opening up multiple airports. They have a lot going on financially, trying to get all these testing sites up and running. Obviously, we only know about one so far, which is JFK. It's presumed that Newark and LaGuardia is coming up next. I know there's some chatter about Boston and maybe Atlanta Airport. So I mean, there's a lot of funds that have to, that are needed in order to do these things. So, I mean, for what's to come, it's very reasonable that they did an offering. It is what it is. Let's just move on from it. In my honest opinion, PR is going to follow sometime. I don't know if it's going to come tomorrow or even next week, but I think it's coming very soon. I mean, we're to the point where JFK is pretty much up and running. I'm seeing photos of it and so forth. So I think that, we're getting very close. The CEO has been very vocal. He's been on a lot of these news channels, talking about what's going on and so forth. And, there's a lot of hints being dropped. So I wouldn't be surprised if you hear PR soon. And if you hear PR with multiple airports, I mean, this thing is going to skyrocket. But for now, everyone's in their safe zone, trying to get in under 5 and around 5 and stuff like that. Then you have a shelf offering or a mixed shelf offering, where it's an offering that can be used in the future at a price that they designate at. And, it's kind of tricky because it could be used a month from now. It could be used 3 weeks from now. You never know when they're going to do it. But again, it freaks out. Everyone hears the word offering, and then, boom, they are, it knocks them down. Then you have public offering, which is what DSS did today. And they did theirs at like $7.55. That thing's never, I mean, I'm never going to say it's never going to go under 8, but it didn't even go under 8. It hit low 8s, and then I think it's going to start to work its way up, because everyone knows that just is where the value is. I mean, it's up there. It should be still trending at 10, even though the offering pissed off a lot of people today. That was a public offering. There's going to be a bit of delusion possibly. However, it is a low float, and that baby is still going to fly. Don't forget that that one is, they're picking up on a COVID-19 company. It's 1.3 billion appraised value, picking it up for 50 million. Everyone knows, everyone's in the waiting zone. I'm in the waiting zone, and I am waiting for that thing to skyrocket. It is what it is, guys. Entry and exit strategies. Let me tell you, I've talked about this a lot on Twitter, but I just want to throw this out to you, okay, guys? When you are looking at stocks, whether it is a normal stock, a low float, a micro float, whatever it is, okay? You need to take in consideration a few things, okay? First thing you need to take in consideration, you have to scan your screen. You have to see what the low is for today, what the high is for today. You have to understand your risk. And, by risk, I mean, if something's called out and it's just with no reason to rhyme, it's just something that you see running. You really have to keep in mind if you're at the top of the page, you might gauge and enter at a lower percentage that you normally would. So like if you usually go in with 5,000 shares, you might go in at 1,000 shares, so that if it does break down and it starts to go down, you're not losing too much. But if it continues to go up and you want to add a little bit on the dips and ride the wave up, then you have a little bit more protection there for yourself. So that is one thing that I would look at. I was always look at volume, okay? In the pre-market, somebody's like, oh my God, this thing's moving, right? And this thing's got like 6,000 volume. That thing ain't moving, okay? That is one person that bought 6,000 shares, and, you buying 30 cents higher than, because the percentage says up 12%, and you're buying 30 cents up, you are basically signing yourself up for a disaster when that thing falls like a fat chick on a seesaw. All right. So listen, guys, be very careful on volume. You want to scan that. You want to be very careful. As far as, when I should sell and so forth, guys, you really got to set your stop losses based on your plan when you enter in anything. You have to mentally prepare all this as you're clicking send and buy into shares. It is what it is. You have to say, you know what, this is what I'm going to do. I am in for X amount of dollars or X amount of, however many pennies is going to go up. I'm going to exit. I'm going to exit some, whatever the case is. You have to have your plan. You have to stick with your plan no matter how high it is. Never be sad of the plan that you execute. Just ride it up, take your profits, move on, and, ride the rest for free. Or if you're taking everything, move on with life and just get on with life. Same thing. If you're entering something and, regardless whether it's the top of the day of high on the day or whatever, I think you need to turn back and assess yourself if it's going down 1, 2, 3 pennies and so forth. I think you really need to have a talk with yourself and figure out what your mental stop loss is. If you have a mental stop loss going in, that you're like, I'm only going to lose X amount of percent or X amount of pennies on it or whatever. If it's a dollar stock, whatever, you need to set that, right when you're entering so that you know. But also keep in mind that just because it's dropping does not mean that it's failing. It could just be a dip, and it could be a chance for you to add a little bit more in. That is the benefit of reading charts and or continued momentum. Okay, so you guys really need to concentrate on your mental stop losses. You need to concentrate on what your plan is as far as how far you're going to move up and when you're going to exit. Okay, now I will say this. Some people were asking about what's the difference between day trade, swings, and longs, okay? You could very well be going into a position where it's a day trade. You see the chart, whether somebody posted on there or you're looking at yourself or whatever the case is, and it looks good, it's prime. There is some information on it or some information coming. It's one of these things where, maybe it's a day trade and then it turns into, a swing. It is what it is. I mean, nothing, just because it didn't move today doesn't mean it's not going to move tomorrow or the day after or a week from now. That is what a swing is, when it's a short-term run and, you're holding for a bit. Long, again, swings can turn into longs. Longs can turn into swings, So, you could enter in a position like DSS. I'm in it for 2 months. But let's say some people are coming into it right now and all of a sudden PR is issued on Friday and the thing goes to 15 or 20, right? You've already made your money. You're checking out. It's gone. That's what we're all waiting for. It is what it is, right? So, you go into a position thinking or believing that you're going to be long and then it turns into a swing. Or, maybe you enter today and tomorrow morning it, hits. Or maybe you hit it tomorrow morning and it hits tomorrow afternoon. So you just never know sometimes with the stock market when news is going to hit or when it's going to rock and roll. Couple things. When talking about offerings, again, I'm backing up. When you hear of an offering and you find a resting spot, wherever it's at, like for SPA today, it is a great thing for you to do to try to grab a hold of some shares. If you hear the word offering, I go right to it and I figure out what it's doing, even if it's not a stock that I know nothing about whatsoever. I'll pick up some and then I'll start to research it afterwards. That's just me. I'm not telling you to do that. But if it is a stock that you're familiar with and you're comfortable with, wait for it to drop and buy it in. If it's something that you're holding, let's say you were holding XSPA and your entry was 525 this morning and all of a sudden that baby dropped to 460. I would have averaged down every day of the week because it's not something that was created by the market. It was something that was done by the company to raise their revenue. You know it's going to come back up. It is a solid hold, average down all day long. But, let me revert back on another note. If you're holding a penny and, that thing's dropping, you just enter and it's the high of the day when you enter and it starts dropping. It is very certain that advisable that you should consider figuring out whether it's going to be a stop loss or whether you're going to average down. Because if that thing is falling a little bit faster, you don't want to be caught with the bag. Now, today, there's a lot of low floats going on today. Guys, I want you to be very careful when you hear the word low float and micro float, okay, guys? Be very careful with it. And I'm telling you, if you usually do, 5,000 shares, I'm talking about like 200 to 500 shares, okay? That thing can move up fast just like that, and that thing could drop fast just like that. You can be up 30 cents to 50 cents within a second, and the moment you try to click sell, that thing is down by $1, okay? Guys, I want you to be very careful. I want you to really be considerate about what you're entering when you hear low float and so forth. BSS, buy, sell, short. If he puts out a low float, he'll tell you. He'll say, listen, this is a low float, go in small. Or if you ever hear him say go in small, go in slow. If you hear me say go in small, go in small. Don't try to make the retirement plan on it, okay, guys? There's a lot of traders out here that are putting these low floats up. They bought dirt cheap. They're riding it up on no news or whatever, and you're buying it on the hype, and you're going to end up carrying bags $3, $4, $5 in, and you're not going to know what to do with yourself. If there's no due diligence attached and it's just running up just because, and you want to ride that wave and you want to be FOMO, that is all good. Be very careful with it. Enter quickly, exit quickly. Do not, ride the wave up thinking that you're going to get $10, $15 out of it, okay? Even if it does. I mean, we had a stock the other day, the urban stock. That thing went from $2 to $39. Man, I commend everyone who rode that wave all the way up, That's just not for me. There's too much risk. And just like somebody said on my page today, yes, down to $13 is a pump and dump. Well, you know what? It was for a reason, and it was a very good ride up. And what goes up must come down at some point. But the reality of the situation, it's not like it went from 2 to 19 and 19 back to 1, So, I mean, it did just, correct itself a little bit. It's got potential to run. Once a runner, could always be a runner, INPX, you guys know I'm in it. I love it. That thing was a former runner. So when you hear former runners, fun, PHUN, these are the guys that you want to consider. When you hear people say this was a former runner, you want to look at it a little bit and try to dip in some, hold some, and see where it's going to go. Because sometimes these things could run out of nowhere and just keep going. All right. So, guys, I think that's a little bit of a talk tonight. I hope this helped. Somebody asked me to do a video for the top 5 things for newbies. I promise you guys I have a webinar to do for some people tomorrow. But I promise you I will try to get a video out for you. Top 5 things for newbies. I'll do that. And I'll look at some of the other requests and I will put that in for you. All right. I hope you have a good evening. Talk to you later.